Thank you, Madam Chair. We are the Finance Committee, but nevertheless, we're also members of the General Assembly, and all the information that I have suggests that the budget that the Appropriations Committee, I don't know if they're done with their work as of this moment, but if not, they're on the cusp of passing a budget which all indications are will spend more in fiscal year 10 than we spent in fiscal year 09. And to me, that phenomenon is indefensible against the backdrop of virtually every family in my district spending less this year than last year, every business in my district spending less this year than last year. And if we as a state can't avoid spending more and more and more in times as difficult as these, when will we ever get a grip on state spending? Madam Chair, through you, if I may, or maybe you know the answer, do you know how much revenue was generated, how much additional revenue came to the state of Connecticut in the year following passage of the income tax?
That's a great question. You were born then?
Thank you. I was pushing you in a stroller, Madam Chair.
I don't have the answer. I don't remember from my stroller days,
but through you, if I may, Madam Chair, to OFA, I don't
Yes.
know if they would know the answer to that question.
I think the income tax after the passage in 91, 92, we saw about a $1.4 billion net increase to personal income tax after you factor out the reduction from the capital gains interest and dividends tax that we had.
And thank you, through you, Madam Chair. Thank you to OFA. And I'm just trying to determine if the income tax raised $1.4 billion in 1991 dollars, and certainly I don't know what those would translate into today's dollars. The package that we have in front of us talks about a $1.8 billion tax increase. And I think we should be mindful of the magnitude of what we're doing. And in my opinion, at a time when our economy is least able to absorb tax increases, this package goes over the top in terms of a burden on Connecticut families and businesses. The last question I'd like to ask to you, Madam Chair, if you know what the highest marginal rate is today on Connecticut estates, what the highest estate tax rate is.
you may pose that question to OFA as
Thank
well.
you. Through you, Madam Chair, to OFA, if they happen to know what current law is with respect to the estate tax.
Through the chair, Senator Roraback, the highest marginal rate is 16% on the value of an estate over $10.1 million.
Thank you. And through you, Madam Chair, this package, as I understand it, includes a 30% surcharge on the estate tax. Is my understanding correct?
Yes, Senator, is a temporary surcharge.
For those unfortunate enough to pass in a prescribed, I think in 09, 10, and 11. And so if there's a 30% surcharge on 16%, that would bring the top rate to 20.8% of a Connecticut death tax, 20.8%.
Yes,
Do
I
you
know
agree
that's
with my
correct,
math?
yes.
And through you, Madam Chair, do you know if any other state in the nation has a death tax as high as 21%?
I do not. You may pose that to OFA, too, if you'd like. I don't know the answer.
Thank you. And even if the answer is maybe there's another state that is taxing it higher than 21%, but Madam Chair, I do think we're playing chicken with people that have been successful in our state. And I think we run the risk of this being the straw that will break the camel's back. And whatever your view is with respect to the succession tax, if people are told that 20% of their estate is going to go to the state of Connecticut, they're going to leave town. They may be back to see us 180 days a year, but we're not going to get their income tax, we're not going to get their death tax, and at the end of the day, we may well end up with less than if we had left the rate alone. I don't know if that's a long enough speech for OFA to have gotten the answer to the question.
But I would like to address one point there, too, that we failed to mention repeatedly. That tax does not apply to a spousal inheritance.
Understood. There's a marital deduction, but sooner or later, there's a day of reckoning, and when that day of reckoning comes, the state of Connecticut is going to want 20% of your estate if you've been successful in our state.
Senator Roraback, while they're still looking, I think one point I'd like to make about the estate tax, and that the same point was made when we established the estate tax 4 years ago, I think it was, that all the people with means would relocate their estates to other states with no estate tax, and that we would have no revenue, zero revenue. I think the Wall Street Journal editorialized and said we would have zero revenue because anybody with that much money is smart enough to hire someone to relocate all their assets out of state. And that's not happened, and we've had a fairly robust and predictable estate tax revenue stream ever since that. And I can't explain that except to say that people think the quality of life here is worth staying here regardless of the tax consequences that might differentiate Connecticut from Florida. But I don't know how the 30% surcharge is going to change that over the next 3 years if that hasn't happened when we had no estate tax to the creation of an estate tax.
And thank you, Mr. Chairman. I guess I would never take the position that everyone would leave the state of Connecticut, but I would take the position that people are weighing many factors in deciding whether or not to remain residents of this state. And each time we add to the death tax, we increase the incentives to leave this state, and we create a brain drain, a talent drain, a commitment drain that is irreversible. I'm not going